It's Sunday the 6th of October, so I'm looking over last week at the chart for the Aussie versus the US dollar. We've got quite bullish patterns going on here now. You can see from these long candle wicks underneath these candles through August, beginning of August, end of August, beginning of September, and now beginning of October. Very long candle wicks. Okay, the candle wicks got slightly shorter as we go through time, but nevertheless, someone down here is interested in buying the Aussie versus the US dollar anywhere below 67. So every time we get down there, the buyers step in, they leave these long candle wicks, and now we've got a really bullish reaction. This is quite a bullish 3-day candle pattern. 1, 2, 3, 4, 5 times we've tested it now and bounced off. Obviously, we got really oversold by the beginning of October, end of September, so that was another good reason why the buyers stepped in, I would imagine. On the weekly chart, you can see we've now got pretty bullish candle matching the one that we saw at the beginning of August. This what do they call it? Gravestone doji. Anyway, so a bullish candle there. So I have to favour a move higher. We're not particularly oversold on the weekly chart, which is something I would have liked to have seen. Getting a little bit oversold on the monthly chart. The only problem for me is that I don't see why we've got buyers down here. I can't see any reason for them to be coming in. I can't see any strong support levels. So that's the only thing that concerns me. But nevertheless, the candles do indicate that the buyers are back into this pair. So we've got resistance around 68.00, 68.10. That'll be the level to watch on the bounce. If we hold that, then we're likely to trade sideways, maybe a little bit similar to what we did in August. We start breaking above 68.20, that's going to look more positive. Now, New Zealand dollar doesn't have that sort of bottoming pattern that we had in the Aussie dollar, but we have hit a good support level, which was what I was lacking on the Aussie dollar chart. So we tested the 2015 low at 62.33. We overran just slightly. We overran 62.01, which was about halfway to very important support from this trend line going back to 2001 actually. So this is an 18-year trend line, massively important. We just missed it by not even 20 pips, missed it by maybe 15 pips. So I had that as a buying opportunity on my trade ideas sheet, which I send to my subscribers every day. If you manage to get into that trade a little bit early, just anywhere in between the 2015 low and that trend line, then you're onto a winner there, and I think that it's worth holding. We've now got a very nice positive candle on the weekly chart to confirm that this is more than likely a swing low. Going back to the daily chart, we've seen a good recovery already, of course, 2 candles with some nice long wicks. So if we need a little pullback to try and get in if we're not already long, I'll put some levels on the reports, some entry points for us. Yen looking quite strong. Yen, in fact, retaining a lot of that strength. We saw the yen gain on the weak stocks, but we didn't see the yen give up those gains when the US stock markets rocketed back up over the last 2 days. So the yen seems to be holding its own. This is the euro against the yen, and clearly in a negative trend, this pair. Now this is tricky. We've got a trend line in the euro going all the way back to 2017. And I wasn't sure if this was broken or not. Well, I did think it was broken at one stage. The trend line, as you can see, comes in around 109.20, but we dipped down as far as 108.77. That was before the dollar turned around and collapsed on weak economic data before Friday. And so then we saw the euro bounce back quite strongly and actually holding on to those gains, or holding on to most of those gains, despite the fact that the jobs number was okay on Friday and the stock market certainly bounced back. So 110.00 is the clear resistance level. I had a selling up there actually on my sheet, on my trade sheet. I had a selling at 110.00, 110.10. So we identified that as a good resistance level. Happy to say that has held. Where do we get to on Friday? 109.97. So we missed it by 3 pips, but clearly that is the level to watch then going forward. But certainly if we get up through 110.30, things are going to look a lot more positive for the euro. Canadian dollar, I can't make sense of that chart. And I'm not even going to bother tackling the pound as we approach the whole Brexit deadline. It's all too political for me. So I've moved straight on to gold. Now gold, I saw this as a topping pattern and I saw this break as a sell signal, but it didn't work. we reversed and rocketed back up in gold on those weak stock markets. And again, we are kind of holding on to those gains actually, despite the bounce back in the US stock market. So trendline resistance at around the 115.25 area. That's going to be key. It's a bit of a mess. I'm going to leave gold alone for a little while because I've been a little bit confused with what happened last week. So I'm going to wait and see what patterns develop, having been wrong about moves to the downside. You see these candles here. You might remember me talking about these, but this has negated all of that with this spike down and this little hammer, would you call it? Hammer candle with a little blue body. So maybe more sideways action. Now silver is developing what appears to be more of a bear trend, more than we're seeing in gold. There we go. Let's put that trend line on there. And if we put this one on here, we can see that potential bear trend developing, this channel. These are not so important now, so I'll take these off. This trend line going back to November 2018 seems to have held it, and it coincided nicely with a 50% fib. We've seen a bounce off there, but nothing as spectacular as the gold bounce. So for me, silver looks the more negative of the two. Maybe if you're looking at trading both, you could sell silver and buy gold. Maybe that's a little spread based on just the trends that we're seeing. I'm going to finish up this part one report with a look at Bitcoin. I've left Bitcoin alone for quite a long time. I let it form this triangle, and then I notified you of the potential move down, and that of course worked. So hopefully you're still holding on to shorts in this. I do think we will continue lower. In fact, it's working out quite nicely. We've broken down. We held just above the 61.8% fib, and we've just traded sideways. So we've just done a typical consolidation in a bear trend, or at the start of a bear trend, and you can see that the 200, the red moving average, the red 200-day moving average has just held the bounce perfectly. Looks like pressure's resuming to the downside. I'm still short this, and I'm just looking now for a break below the previous low. So a break below 7,700 should take us down to 72.70, 72.50. I think we can see 7,000, and I think we can even see 6,800, 6,700, maybe even more losses than that. Probably not in one straight move. That's not the way markets tend to work. But I am feeling pretty negative on Bitcoin. There you go. This is why we're holding. This is the 100-week moving average at 77.34 right now. So the lowest, look at that, the low was actually 77.34. So I've got to say, I've said it before, Bitcoin is technically one of the best markets I've seen. It just trades off the technicals absolutely perfectly. I guess it's because there's no real fundamental news to drive this market. But when you look at this chart, you can see I have actually got a trend line going back to 2017, which is now capping. The trend line comes in at 8,630. We got to 8,530. So the question is, do we break above 8,600 or do we break below 7,700? I think we'll break below 7,700 and continue lower. Okay, that's it for the Forex report. If you're interested in subscribing, please go to daytradeideas.co.uk. And don't forget to subscribe to the YouTube channel.